The Subcommittee on Financial Institutions will come to order. Without objection, the chair is authorized to declare a recess of the committee at any time. This hearing is titled A New Era for the CFPB, Balancing Power and Reprioritizing Consumer Protections. Without objection, all members will have 5 legislative days within which to submit extraneous materials to the chair for inclusion in the record. I now recognize myself for 4 minutes for an opening statement. Thank you to our witnesses for joining us today for our first Financial Institution Subcommittee hearing in the 119th Congress. I'm excited to lead this subcommittee again, especially at a time when we have an administration which understands the costs of burdensome overregulation. Nowhere has overregulation and overreach been more evident than at the Consumer Financial Protection Bureau, which became the most unchecked and unaccountable agency in the entire federal government under the previous administration. Under former Director Chopra, the CFPB prioritized politics over sound policy, leading to disastrous outcomes for American consumers. The good news is that a new era has begun under President Trump, an era where businesses are not attacked through press releases or tweets, curtailing their ability to offer financial services and products. Instead, they are encouraged to provide them in a competitive, safe, and sound manner. An era where the Bureau's approach is not opaque and abusive, but transparent and fair. An era where those in charge prioritize administrative law over overregulation by enforcement, avoiding extortionary civil investigative demands, or CIDs. I look forward to working with the CFPB in this new era. Past abuses like those under Director Chopra stem from significant structural flaws at the CFPB, which reduce accountability and lead to regulatory swings that stifle innovation and competition. Republicans have long called for reforms to ensure the Bureau is accountable to the American people. Today, we'll propose transitioning the CFPB to a bipartisan commission and bringing it under congressional appropriations. I recently reintroduced the TABS Act, which would require the CFPB to go through the traditional congressional appropriations process. This would restore the power of the purse to Congress and ensure that the elected representatives of the American people have a say in the Bureau's operations and budget. Beyond the structural flaws that we will explore today, I want to highlight 2 areas where the CFPB has abused its power and threatened, not helped, consumers in the process. The first is the abuse of CIDs. Under Director Chopra, the Bureau forced law-abiding financial services providers to sift through thousands of pages of business documents and sit for hours of oral testimony without specifying alleged wrongdoing, just hoping to find something. These fishing expeditions were designed to litigate companies into bankruptcy or destroy their reputations, doing nothing to protect consumers, but harming them by eliminating products and services from the market. Alarmingly, Director Chopra acted as judge, jury, and executioner in each case, rejecting even the appearance of due process. In response, I introduced the CID Reform Act to impose guardrails on the use, scope, and process surrounding CIDs. The second is the Bureau's UDAP authority. The abusiveness prong in the CFPB's UDAP authority is undefined. Under Director Chopra, the CFPB identified abusiveness in the same way Supreme Court Justice Potter Stewart did in describing his threshold test for obscenity. I know it when I see it. This lack of guidance gives institutions no clarity on how to comply and opens the door for abuse by a rogue director. During President Trump's first term, Bureau Director Kathy Kreninger defined abusiveness. Unsurprisingly, Director Chopra revoked this much-needed guidance. My bill rectifying UDAP Act defines abusiveness to inject clarity and certainty, encouraging financial services providers to operate confidently and in turn increasing consumer access to vital products and services. The best consumer protection is consumer choice. A transparent, law-abiding Bureau will foster an environment that promotes competition and delivers better outcomes for all Americans. I look forward to discussing these issues today, and I yield back. The chair now recognizes the ranking member of the subcommittee, Dr. Foster, for 4 minutes for an opening statement. 5 minutes. 5 minutes for an opening statement.
Well, thank you, Chair Varr, and to our witnesses. Under normal circumstances, a change in administration will naturally result in a recalibration of policies. And introducing new legislation with ideas old and new to reflect those shifts in policies will be part of that. Our witnesses today make some valid points about some CFPB policies which could be discussed, but these are not normal times. Since taking office, President Trump, Elon Musk, and Russell Vought have abused their authority to shut down the CFPB and other agencies that Americans rely on for their financial security. After DOGE employees raided the Bureau's headquarters, CFPB employees were told to stop all work. Hundreds were let go, its contracts were canceled, lawsuits brought by the agency against bad actors were summarily dropped, and even the Bureau's name was ripped from the building. These are not reforms. They are illegal attacks on the CFPB's congressionally mandated existence, and also attacks on the dedicated civil servants that fight every day to protect consumers and hold big financial firms accountable. In fact, this hearing today, discussing tweaks to the CFPB policies and organizations, feels a bit like Republicans rearranging the deck chairs on the Lusitania after they torpedoed it. Members who are in office in the wake of the 2008 financial crisis will never forget what it was like. Holding workshops for terrified families facing foreclosure and bankruptcy, but the unregulated storefront mortgage originators that talked them into those mortgage contracts had all gone bankrupt. They were being squeezed by credit card companies using a parade of horribles like double cycle billing and universal default, with pages of fine print deliberately written to be so complex that no human beings could ever read and understand them. But there was almost nothing that we could do to help them. They had signed contracts, and we are a country of laws. The best that we could do is to make sure that never happened again. So following the financial crisis, Congress established the CFPB as the primary agency responsible for enforcement of consumer financial protection laws. Since its creation, the financial watchdog has helped millions of Americans get more than $21 billion back from scammers and financial companies that have violated the law. The Bureau's Office of Service Member Affairs returned more than $363 million to military service members harmed by financial companies. The CFPB's Office for Older Americans monitored for abuses targeting senior citizens, shut down nationwide telemarketing scams. Just one enforcement action by the Bureau returned more than $53 million to American seniors who had been cheated. Despite these accomplishments, after the DOGE raid on the CFPB, Bureau employees were informed that new leadership intends to turn the CFPB into a single room with, quote, 5 men and a telephone. That is not Congress's intent. In the last administration, the CFPB wrote important new rules protecting Americans from overdraft fees, rules giving consumers control over their financial data, and rules to ensure that a medical emergency, domestic violence, elder abuse will not ruin an individual's credit score and financial future. The Bureau also regulates non-bank financial companies. I expect many of our witnesses today would agree that non-bank financial companies should face similar regulatory requirements to banks and credit unions if they offer similar services. But with the CFPB shutdown, that's not going to happen. The CFPB was the only cop on the beat for consumer finance, and without it, it will once again be open season for scammers preying on hardworking American families. Big tech companies will have a free rein to invade the regulated financial system without accountability, while banks and credit unions continue to be highly regulated. Finally, I don't believe it's an accident that Elon Musk and his DOGE crew shut down the CFPB exactly at the time that Musk is planning to turn X into a payments and financial platform that the CFPB would naturally have the authority to regulate. The CFPB was created to protect consumers from abuses by some of the most powerful financial institutions in their lives. The Bureau's work is important, it is constitutional, and consumers benefit when financial firms are held accountable. We do need to reopen the CFPB and let its employees do their jobs. I yield back.
The gentleman yields. The chair now recognizes the chairman of the full committee, Mr. Hill, for 1 minute.
Thank you, Chairman Barr. Appreciate your leadership for holding this hearing on the CFPB. Since its creation, the CFPB has acted as an overreaching regulator. Partisan political agendas have led to burdensome regulations and truly redundant, duplicative supervision that overlooks the impact on Americans' access to credit and discouraging innovation. The CFPB urgently needs reform to ensure accountability and transparency to Congress and the American people. Financial institutions, particularly smaller banks and credit unions, have reported increased compliance burdens that are making their operations unnecessarily difficult. Today's witnesses will discuss real-world consequences of the CFPB's misguided policies. I look forward to hearing these ideas for reforms today that will foster clarity and consistency so that financial institutions, in fact, can innovate, grow, and better serve their customers. Because it's competition and innovation, not government mandates, are the best way to improve access and reduce costs for financial services. I yield back.
Gentleman yields. Thank you. And today we welcome the testimony of Mr. Brian Schneider, a partner at Mannett, Phelps and Phillips in Chicago, Illinois, where he focuses on advising clients through the gamut of consumer financial services, regulatory, and enforcement matters, particularly as it relates to supervision, enforcement, and fair lending. He previously held roles at the Consumer Financial Protection Bureau and was secretary of the Illinois Department of Financial and Professional Regulation under Governor Bruce Rauner. Mr. David Pomeran is General Counsel and Head of Regulatory Affairs at the Consumer Bankers Association, a trade association representing financial institutions offering retail lending products and services. Mrs. Anna Fonseca is the CEO of Logix Federal Credit Union in Valencia, California, and is testifying on behalf of America's Credit Unions. She has been with Logix for over 20 years and previously served as Chief Operating Officer and Chief Financial Officer. Mrs. Rebecca Keene is a partner with Hudson Cook LLP, a consumer financial services law firm in Washington, D.C., where she counsels businesses on compliance with financial and consumer laws, fair lending, and other federal and state regulations. She was formerly an assistant director for the Division of Privacy and Identity Protection at the Federal Trade Commission, where she was responsible for leading enforcement policy outreach and rulemaking activities for the FTC's Fair Credit Reporting Act program. And finally, Mr. Seth Frotman is the former General Counsel and Senior Advisor to Director Rohit Chopra at the Consumer Financial Protection Bureau. We thank each of you for taking the time to be here. Each of you will be recognized for 5 minutes to give an oral presentation of your testimony. Without objection, your written statements will be made part of the record. Mr. Schneider, you are now recognized for 5 minutes for your oral remarks.
Thank you, Mr. Chairman, Ranking Member Foster, and members of the subcommittee. Thank you again for the opportunity to testify at today's hearing. My name is Brian Schneider. I work at the law firm of Mannett, Phelps and Phillips, where I focus my practice primarily on advice concerning consumer financial matters. The views I offer today, however, are my own. I previously served as Associate Director for Supervision, Enforcement, and Fair Lending at the CFPB, and prior to that, I did serve as Secretary of the Illinois Department of Financial and Professional Regulation, the chartering, licensing, and supervisory authority for all financial services companies operating in the land of Lincoln. I appreciate the opportunity to submit written testimony, and I'll highlight at this time some points that I believe could be most relevant as you and your colleagues consider options for setting new priorities for consumer financial regulation. Acting through rigorous compliance with the Administrative Procedure Act and related laws is indeed the hallmark of careful regulation. Similarly, risk-based supervision is key to the successful oversight of the financial services system. Supervision facilitates the prevention of consumer harm before it occurs. But supervision must be built on confidence that a supervisory exam is not a civil enforcement investigation by another name. The involvement of enforcement staff in the planning or execution of supervisory exams should be prohibited. Enforcement is a tool that is essential to the CFPB's mission. During my tenure at the Bureau, we brought dozens of enforcement actions. But enforcement should be reserved for situations in which the CFPB has determined that it must proceed against a bad actor whose behavior has caused significant consumer harm and has allowed it to operate out of compliance to the detriment of its competitors that follow the law. The aim of enforcement should be on stopping the entity from engaging in the prohibited conduct and the prompt and fulsome remediation and redress of all consumer harm. Civil penalties unquestionably play a role in a reasoned enforcement regime, but eye-popping fines just for the sake of grabbing headlines should have no place. Moreover, enforcement should be undertaken only when the entity's actions violate clearly articulated statutory or regulatory requirements. When Congress has given the CFPB broader, less specific authorities, such as the prohibitions against unfair, deceptive, or abusive acts or practices, its enforcement activity should be stayed in advance of development of a procedurally valid regulatory requirement or proceed in an incremental manner that provides clarity for regulated entities through the careful development of the common law. The CFPB must rigorously abide by its statutory obligations to coordinate with federal and state prudential banking and financial services regulators. The CFPB should respect their expertise and not discharge its obligation to coordinate by merely listening to the appropriate fellow regulator and then opening its own new duplicative examination or investigation. I make no quarrel with the CFPB nor the fine people that work there, but because their work occurs within an agency whose very structure seems designed to subvert constitutional principles, it will in its current form likely never be able to fulfill its mission. Some ideas on what to do. In the wake of recent multi-year blizzard of guidances, blog posts, interpretations, manual amendments, and speeches, the CFPB ought to rescind or repeal those that fail to comply with the APA or that exceed its lawful authority. Pending enforcement action should be similarly reviewed. The CFPB should balance its resources to effectively deploy each of its four tools: rulemaking, supervision, enforcement, and often overlooked consumer education. The CFPB's current funding mechanism, while constitutional, is troublingly inconsistent with fundamental principles of separation of powers and ordered liberty. While serving the government of the state of Illinois, I had to request appropriations for our operations from the Illinois General Assembly. Despite some occasional messiness, Illinois legislators consistently discharged their duties and provided our agency with the necessary resources to do its work in a manner consistent with the authority they gave us. The same can be expected from Congress and should be demanded. Congress should consider the need for the establishment and strengthening of limitations periods concerning both the issuance of civil investigative demands and underlying conduct. And Congress should evaluate the need to cabin the CFPB's use of its UDAP authority to situations where the entity has not acted in good faith with respect to its compliance obligations. Thank you for the chance to testify. I look forward to your questions.
Thank you. And Mr. Pomeroy is now recognized for 5 minutes.
Thank you, Chairman Barr, Ranking Member Foster, and members of the subcommittee. The Consumer Bankers Association greatly appreciates the opportunity to testify today on the CFPB's recent activities and the agency's future. My name is David Pomeroy. I am General Counsel for the CBA, the only national trade association focused exclusively on retail banking. To start, I want to make it clear that CBA supports a credible and durable consumer regulator. However, the political shifts over the past few years have created instability and uncertainty, and we've now directly seen the need for reform at the agency. The reform should be focused on ensuring that the Bureau is following the law while protecting consumers. In the past, we have worked closely with the Bureau to ensure rulemakings do not have adverse effects. However, under the leadership of the former director, the Bureau has failed to follow the law and exceeded its statutory authority. This has resulted in an unprecedented number of lawsuits against the agency by the entities it regulates. CBA believes that facts matter and that regulators must represent facts accurately. Under its previous leadership, in an attempt to justify its rulemakings, the Bureau misrepresented its own data about the state of the consumer financial services market. The prior administration's politicalization of the Bureau eroded public confidence, damaged the Bureau's long-term credibility, and led to policy outcomes that were optimized for short-term political gains at the cost of consumers' long-term financial health. There are a number of positive administrative changes that could easily be implemented by the new leadership at the Bureau. However, we have seen with the increasingly drastic political swings, any of these changes can just as easily be undone by the next administration. To create long-term stability and credibility for the Bureau, legislative reforms are needed. CBA supports enacting legislation that would ensure the Bureau operates within its authority and creates greater stability, transparency, and credibility. CBA has long prioritized the need for reform at the Bureau's UDAP authority, and we strongly support Chairman Barr's Rectifying UDAP Act. Treating customers fairly and closely following consumer protection laws are core to banks' business models. However, the Bureau's UDAP authority has been largely undefined and closed to input from stakeholders. A clear and defined process will provide guardrails which are needed to ensure regulated entities know what is or is not permitted and how they can comply. The Bureau has put all companies it regulates at risk of inadvertent non-compliance because it is unclear how and when the abusive standard will be applied. In particular, CBA supports requiring the Bureau to refrain from using its unfair and abusive authorities to seek monetary relief unless it has previously articulated a specific harm. In other words, the Bureau should not be able to move the target without letting the market know first. There are additional pieces of legislation that would directly impact the Bureau's oversight. For example, the TABS Act would place the Bureau's funding structure under the appropriations process. This would allow for greater congressional oversight and hold the Bureau more accountable to Congress. CBA also supports the Consumer Financial Protection Commission Act, which would update the Bureau's leadership structure to a 5-person bipartisan commission instead of a sole director. We believe this would help reduce the radical pendulum shifts between administrations and bring long-term stability to the Bureau. It is also necessary for the Bureau to conduct more robust cost-benefit analysis in its rulemakings, which is provided for in the Transparency and CFPB Cost-Benefit Analysis Act. We believe it is also important for the Bureau to have an independent Inspector General, which is provided for in the CFPB IG Reform Act. These legislative proposals would ensure the rulemaking processes and the law are being properly followed. Other ways Congress could improve the Bureau's regulation and supervision would be to create independent lookbacks to review major rules that would require a rule to sunset or be reproposed if that rule's cost outweigh its benefits. We also believe the Bureau should commit to considering self-reporting and remuneration of compliance issues when weighing whether it brings an enforcement action or saddles a supervised institution with a matter requiring attention. Thank you, Chairman Barr. Thank you, Ranking Member Foster and the subcommittee for the opportunity to testify here today. We appreciate you convening this very important hearing, and we stand ready to work with you and the subcommittee to achieve thoughtful and effective policies to ensure the Bureau is a durable and strong consumer protection regulator. Thank you.
Thank you. Ms. Fonseca, you are now recognized for 5 minutes.
Good morning, Chairman Barr, Ranking Member Foster, and members of the subcommittee. My name is Anna Fonseca, and I'm testifying today on behalf of America's Credit Unions. I currently serve as the president and CEO of Logix Federal Credit Union, a $9.8 billion institution headquartered in Valencia, California. Thank you for the opportunity to share our thoughts and perspectives on the CFPB and consumer financial protection. At Logix, we pride ourselves on our programs to serve our members. Logix was founded during the Great Depression as Lockheed Aircraft Employees Federal Credit Union. What started as a small financial cooperative on Lockheed's Burbank campus has grown into a trusted financial institution serving 253,000 members and managing $9.8 billion in assets. As we have grown, we remain true to our founding principles. Logix is a member-owned and not-for-profit institution prioritizing affordable, consumer-friendly financial services over profit. This is just part of the credit union difference. Our member-owned cooperative structure makes credit unions the original consumer financial protectors. Still, credit unions find themselves subject to the rules, burdens, and costs associated with being regulated by the CFPB. For an institution like Logix, our expected crossing of the arbitrary $10 billion threshold that subjects us to greater CFPB scrutiny has a cost. Our own internal estimates are that those burdens that come with crossing that threshold will average about $4 million a year, and that doesn't count the roughly $10 million a year that we expect to lose in debit interchange income due to the Durbin Amendment. And that's just in the first year. With such a significant decrease in revenue, combined with a substantial increase in CFPB compliance-related expenses, our ability to deliver the superior value our members have come to expect over the past 88 years will be severely impacted. Credit unions are different than other entities that are regulated by the CFPB in that there are a number of statutory consumer protection provisions included in the Federal Credit Union Act that other types of financial institutions do not have. Credit unions also do not have the armies of lawyers that large Wall Street banks have to keep up with the pace and scope of regulations coming out of the CFPB, yet we are still subject to them either directly or indirectly. This has led to significant consolidation in the industry since the passage of the Dodd-Frank Act and the creation of the CFPB. Recent years have also seen the CFPB focus less on its statutory mission and become more focused on changing the marketplace in a politicized fashion. My colleagues in the credit union industry feel as though they are dying a death of 1,000 cuts. Their revenue on all fronts is under attack, and their costs to comply with ever-increasing regulation continue to mount. Change needs to come to CFPB, and we believe the time for Congress to act is now. We support and would recommend a series of legislative changes that include, first, moving the leadership to a bipartisan commission. A single director makes the Bureau more political and does not allow for open, robust discussion like a 5-person commission would. Second, increasing congressional oversight of the CFPB through subjecting the Bureau to congressional appropriations and creating its own Inspector General. Third, providing greater clarity on UDAP. Fourth, expanding and clarifying exemptions for credit unions from the CFPB. Fifth, increasing CFPB usage of cost-benefit analysis and sub-REFA panels. And finally, reforming the civil investigative demand process. These statutory changes and clarifications should be combined with a renewed focus and commitment from the Bureau to be a data-driven organization that focuses on its specific statutory obligations to protect consumers from unregulated entities and bad actors operating in the financial system. Any new CFPB rulemaking should follow the principles outlined in my written testimony that will help ensure this approach. In conclusion, consumer protection in financial services is important. Making these changes now will help ensure that we have an apolitical focus on consumer protection moving forward. We applaud the subcommittee for beginning this difficult discussion on how to reform and improve the CFPB. I thank you for the opportunity to appear before you today and welcome any questions you may have.
Ms. Keene, you are now recognized for 5 minutes for your oral remarks.
Good morning, Chairman Barr, Ranking Member Foster, and members of the subcommittee. Thank you for the opportunity.
Ms. Keene, if you could start over and turn on your microphone.
Push the button, yes.
Yep, thank you.
Sir.
Thank you.
Good morning, Chairman Barr, Ranking Member Foster, and members of the subcommittee. Thank you for the opportunity to appear before you. My name is Rebecca Keene, and I'm a partner at the law firm Hudson Cook, which focuses on consumer financial services law. Earlier in my career, I worked for the Federal Trade Commission as an assistant director in the Division of Privacy and Identity Protection. I am appearing today in my own capacity, and my remarks are my own and not those of my firm or any particular client of the firm. The CFPB is a comparatively young agency by federal agency standards, but its approach to consumer protection, particularly its use of enforcement actions to define the activities that the CFPB believes violates the law, has raised significant concerns about regulatory overreach and has created uncertainty in the financial services market. My testimony today will be focused on 2 areas that are in need of reform: the CFPB's exercise of its enforcement authority over alleged violations of the Dodd-Frank Act prohibition against unfair, deceptive, or abusive acts or practices, or UDAP, and the CFPB's use of its investigatory authority, in particular, its use of CIDs, or civil investigative demands. The Dodd-Frank Act grants the CFPB the authority to take action against companies to prevent unfair, deceptive, or abusive acts or practices in connection with a consumer financial product or service. The concepts of deception and unfairness have a long history in case law, largely from the work of the Federal Trade Commission. But the concept of abusive does not. And the contours of the Bureau's abusiveness authority, particularly how it differs from unfairness and deception, remain unclear to this day. The Bureau has primarily used its enforcement authority to declare what it believes is abusive. But the cases themselves have not shown how that's different from unfairness or deception, and they've been inconsistent in applying the abusiveness prongs to similar facts and circumstances. The result is that the enforcement looks arbitrary or results-oriented, and as some have said it, it's regulation by enforcement. This approach has real due process and fairness concerns. The CFPB can simply declare an existing practice abusive and penalize financially companies without giving them a chance to adjust their policies. To provide regulatory certainty, the CFPB should be required to clearly define the standard for finding an act or practice abusive through a notice and comment rulemaking. And the CFPB should only seek monetary relief where it has defined a specific practice as abusive through formal rulemaking or it has obtained a prior order against a company. This would provide more regulatory certainty while allowing the CFPB the ability to address new and emerging issues. The CFPB's investigative process similarly needs reform. Civil investigative demands, or CIDs, are one of the primary tools used by the CFPB to compel companies to produce documents, answer questions, and even provide oral testimony to the CFPB before any formal enforcement proceedings commence. The CIDs impose enormous costs on companies and result in business disruptions that last months, often years. The demands involved substantial electronic discovery costs, not to mention attorney's fees, and there is a real human cost on the employees of the companies who are subjected to these demands. The law allows the CFPB to issue a CID when it has reason to believe that there is a violation. But where there's no reason to believe there is a violation, no CID should issue. But that's not our experience. The CFPB has not limited its use of the CIDs to that. Rather, they use it to gather information about a particular segment of the market or to conduct top-to-bottom reviews of businesses that have been disfavored by the CFPB, even where they do not have examination authority over those entities. The law gives companies the right to file a petition to modify or limit a CID, but if you do that, then your investigation is made public. This has the effect of making a confidential investigation open to public view, and it dissuades companies from exercising their rights to object to what are otherwise overbroad or unduly burdensome consumer investigation demands. The bill before us, H.R. 10036, would reform the CID process by creating a process to address concerns early in the investigation, to adjust the scope of it to an appropriate size. And it would require the CFPB to treat petitions to modify as confidential. This would make the process more fair. Thank you for the opportunity to testify before you today. I am happy to answer any questions.
Thank you. And Mr. Frotman, you are now recognized for 5 minutes.
Chairman Barr, Ranking Member Foster, my name is Seth Frotman. Until about a month ago, I was General Counsel at the Consumer Financial Protection Bureau. But today, I am speaking for myself about the profound disconnect between a hearing that purports to be about, quote, consumer protection and the devastation that this administration's actions and legislative agenda will unleash for working people. Over the last 4 years, the CFPB cracked down on junk fees, tackled the crushing impact of medical debt, protected military families from fraud and widowed spouses from scams, and took on big tech's relentless stampede into consumer finance. We stood up to unscrupulous corporations and billionaires on behalf of working families, the people that this administration promised to fight for. The CFPB has gotten back more than $20 billion for working people on a budget that is the fraction of that size. All that came to a screeching halt when President Trump, Elon Musk, and Russell Vought took over the CFPB. They have taken Wall Street's cops off the beat, granting shameless pardon after shameless pardon to companies that ripped off their own customers. This administration's attack on the CFPB drips with disdain for everyday Americans. The actions of this administration to take money from working people and give it to the rich speaks louder than words, especially any empty rhetoric about reprioritizing consumer protection that will be said at this hearing. So I'll repeat what I told this committee almost 6 years ago about the vital role of the CFPB. It is important to recall what people's lives look like, what this nation looked like as the CFPB opened its doors in 2011. It had been 3 years since the peak of the financial crisis, but for millions across the country, the crisis was still raging. Families were losing their homes. Service members were falling victim to financial predators who viewed them as dollar signs in uniforms. Everyday Americans were targeted with bogus add-ons and hidden fees, leading to financial ruin by 1,000 cuts. The combined forces of these ripples of deceit and devastation left millions of shattered families and shattered dreams. That is where the CFPB stepped in. 6 years later, we are on the verge of returning to that bleak and dangerous past. And while this is going on, we are now subjected to the same old tired industry talking points, the same push for deregulation that makes too-big-to-fail bankers, big tech, and billionaires rich, while leaving working people and their communities bankrupt when the music stops. A lot of people in this town, the K Street lobbyists, the revolving door lawyers, try to make straightforward things complicated. The battle over the future of the CFPB is not. It comes down to a handful of simple questions. Are you on the side of military families or the predators who lurk outside the base? Are you on the side of parents struggling with error-ridden medical bills or the debt collectors trying to make a quick buck on their backs? Are you on the side of people who get debanked or the financial institutions that fight like hell to keep doing it? When you look past the rhetoric, the deceptively labeled bills touting through the looking glass reform, what is going on in the executive branch, alongside what is being pushed here in Congress, really boils down to one time-tested proposition. Which side are you on? If you're going to stand idly by while the nation's consumer watchdog is decimated, if you push a legislative agenda of more junk fees, abusive medical debt collection practices, big tech domination, and predatory lending, then the answer is pretty clear. I want to close with this. You, your family, your neighbors, and your community are at risk today because President Trump and Elon Musk have corruptly handed over the keys of our nation's consumer watchdog to the largest banks and tech companies in the world. To be clear, the rogue efforts to shut down an agency that was created in the wake of the worst financial crisis in memory are blatantly illegal. Right now, there is an $18 trillion ticking time bomb of consumer debt, a real and imminent threat to your family's future. We have seen this movie before, and the sequel may be much worse than the original. It is time to end this debacle. The CFPB must get back to work. A hearing that purports to be about consumer protection that focuses on anything else is an insult to the many hardworking Americans who just want a fair shake in today's economy. Thank you.
Thank you, Mr. Frotman. Let's examine who the real predator is. The Orwellian predator, the Consumer Financial Protection Bureau. Since President Trump took office, we have heard multiple complaints from my Democrat colleagues about executive power and DOGE and Elon Musk controlling funding. For example, Ranking Member Waters referred to Elon Musk as, quote, an unelected billionaire co-president, end quote, multiple times in front of this committee, and that, quote, they attempted to illegally kill the CFPB, end quote. And, quote, unelected billionaire Elon Musk seizes control of American people's money, end quote. My friend, Representative Kasten, brought up how Elon Musk is violating Congress's power of the purse. So my question really should be geared toward my friends across the aisle. If you are so concerned about unelected officials in the executive branch controlling funding and the future of the Bureau, why aren't you supporting reforms to the Bureau structure to bring oversight back to Congress? If you are so worried about violations to the power of the purse, why aren't you supporting my TABS Act and bringing appropriations powers back to Congress? Ms. Keene, during your tenure at the Federal Trade Commission, did you find a commission structure or being funded through the normal congressional appropriations process somehow prevented you from protecting consumers?
No, I did not. The commission structure at the FTC allowed business to continue even through changes of administration, as it is now, and it allowed the work to have the insight of both sides of the aisle. So issues were fairly considered in front of the commission.
Well, under Director Chopra, the Bureau engaged in phishing expeditions through its CID process, burdening institutions with requests for documentation, time, resources, other demands without any foreseeable end in sight. Ms. Keene, you, I think in your written and oral testimony, really laid out the abuses from the Bureau. And this is why I introduced the CID Reform Act. Ms. Keene, you've represented clients who've been victimized by these phishing expeditions. Can you describe what these small business owners, these American citizens, have to endure with these CIDs?
Yes, sir. I think it's really telling because I think the focus of Mr. Frotman's open remarks were talking about large banks. But the clients I represent are not large banks. They are small businesses in your local community trying to serve a variety of needs of consumers. And when they receive a CID, it's exhausting. It's a lot of documents under short time frames. The usual return date for a CID is 30 days. And there can be 30 or 40 requests in a particular CID. That's a lot of time and effort on the part of the company to try to gather that information. And there are very limited abilities of the company to bring objections in a meaningful way that doesn't expose the investigation.
I think your testimony brings to light who the real predator is here. Mr. Schneider, how do these demands discourage financial providers from offering financial products and services to consumers?
Well, if you don't know what the rules of the road are, it's very difficult to innovate. It's very difficult to know what you can bring to the market that isn't going to be immediately attacked. So you just end up spending a lot of money trying to figure out, hiring lawyers, hiring to figure out what you need to do just to keep going with your current products, and your innovation is lost, and that's never seen, quite frankly. What doesn't happen is never seen.
Well, you know, we want cops on the beat, but we want due process. And CIDs from the Bureau lack due process. Can you speak to that?
Well, I would echo my colleagues' statements. These are extraordinarily broad requests. They often are seeking information about conduct that could never be the subject of an enforcement action. There's extraordinarily tight deadlines. If you have any objection to the scope of the CID, you have to go back and hope to get relief from the entity that's delivered it to you. And I might add, when you do that, if you dare to petition to modify or set the CID aside, that becomes part of the public record. So you're tainted with as being an entity under investigation merely by the action of seeking to make it more reasonable for you to respond.
Yeah, I think it's also reasonable just to require the CFPB to tell the target why they're actually doing this investigation. Mr. Pomeroy, last question to you. In fulfilling the America First agenda, the President has begun removing government waste and overreach and ending the disastrous DEI cancer that is spread throughout our financial system. In the finalized Section 1071 Small Business Data Collection Rulemaking, this rule requires small business lenders to collect 81 data fields from small businesses, including whether the applicant is minority-owned or LGBTQ, the sex, ethnicity, race of the principal owners, et cetera, increasing compliance costs and reducing loan availability. Can you discuss some of the costs of this rulemaking and elaborate why it must be rescinded to protect small business access to credit?
Well, the 1071 rulemaking has lots of different avenues right now. Of course, it's subject to litigation. The original statutory language only required 13 data fields. I believe the end result was 81 data fields, which is why the Bureau was sued in the first place. Our concern with the 1071 data fields beyond the 13 is that it will complicate the process. The banks have spent a lot of time going in and out of compliance and preparing for compliance with this rule.
My time has expired, so I'm sure there'll be more questions about this later. The chair now recognizes the ranking member of the subcommittee, Dr. Foster, for 5 minutes.
Thank you, Chair Barr. And as a threshold matter, do any of our witnesses believe that 5 men and a telephone will provide adequate consumer protection in our country? Any of those raised? Okay, let the record say I saw no hands here. What about protecting financial businesses who are good actors against new unregulated online competition? Do we believe that 5 men and a telephone will provide adequate protection for those good actors? Again, no hands. I think that's really what's at the heart of this hearing. So, Mr. Frotman, can you sort of give us the lay of the land? You know, what is actually currently happening at the CFPB?
Thank you, Congressman. So what is happening at the CFPB now is devastating for working people. It is a boondoggle for the billionaires calling the shot in this administration, and it is nothing more than sheer corruption. Since the beginning of February, this administration has been hell-bent on destroying the nation's consumer watchdog. The financial inspectors that were spread across the country, making sure that businesses were following the law, making sure there was a level playing field for honest businesses, were sent home. They are still not back on the job. There hasn't been exams of financial institutions to make sure they are following the consumer financial protection laws by the CFPB in over a month. They have dropped now nearly a dozen enforcement actions. Just to give you a few examples, they dropped the CFPB's enforcement action against Zelle and the nation's largest banks for allowing hundreds of millions of dollars of fraud to fester on their payment system. They dropped the Bureau's case against Cap One, where they tricked and deceived people with savings accounts from getting the interest rate that they were entitled to, money that could have been used to help them pay for groceries. They dropped a case against Solo Funds, an outfit that was ripping off working people with junk fees and a tip scheme and dark patterns that numerous other state attorney generals and regulators from coast to coast had already taken into account. The current CFPB director tried to take credit for this and was shamed so much in a community note on X, we haven't heard from him since. And this is what is happening across the board. They shut down the Bureau's office that this Congress created to protect service members, to protect students, to protect older Americans. I do not see who this benefits. It does not benefit the honest businesses that we have heard so much today from our panelists. It doesn't protect American consumers who desperately need help. The only people this helps are too big to fail bankers and Silicon Valley billionaires.
So right now, if a service member or an elder gets ripped off, who do they go to? Where do they actually get help from today?
It's entirely unclear. We've had sworn testimony in federal court talking about how this administration broke the consumer complaint system. The system where if service members call in or write a complaint, more than 400,000 military families have done this, that system isn't up and running. It's not getting them the information they need. The examiners on the ground making sure that banks and non-banks are complying with key military consumer protections, like the Military Lending Act, the Service Member Civil Relief Act. Those inspectors aren't on the ground making sure that these companies are following the law. I spent years of my life at the Bureau trying to protect military families. And the idea that we would just shut off this incredibly important tool that is not only important for individual families' financial future, but imperative for our military readiness is just appalling.
Thank you. And one of the key promises from from President Trump on the campaign trail was to drive down prices and make America affordable again, starting on day one. A key element of that was his promise to cap credit card interest rates at 10%. Which I don't think we see legislation on this or any action on that front. Could you say whether overall the shutting down the CFPB and the rest of the actions are actually going to lower costs for Americans?
They'll do nothing to lower costs. I had a chance to look through the agenda, and it's hard to believe that this is on track with a president who on the campaign trail talked a big game about taking on banks and driving down credit card interest rates. Nothing in the agenda you see here, the fight to make sure that people pay more junk fees when it comes to their bank account or their credit card or on medical debt, will do nothing to make working people's lives better.
Thank you. Yield back.
Gentleman yields. The gentleman from Michigan, Mr. Heisinger, the sponsor of the Consumer Financial Protection Commission Act, is recognized for 5 minutes.
Well, thank you, Mr. Chairman. And Mr. Chairman, I see Mr. Chopra has surrounded himself with like-minded activists. And I quite honestly never thought I would pine for the days of Richard Cordray to have some reasonableness injected into the CFPB. But the CFPB's unique structure prevents Congress from conducting meaningful oversight. I know this because last session I was chairman of the Oversight and Investigation Subcommittee, and I know too well the roadblocks and speed bumps and, frankly, brick walls we ran into with the CFPB. A single director who has no accountability, no boundaries, limitless funding, and will go and push the accepted and legal bounds of their organization is a recipe for disaster. And I think that's why we've seen this one agency be challenged so much over its own existence and its actions. And unlike other agencies such as the FDIC, the Fed, the alphabet soup of all the regulators who paused their rulemaking after President Trump was elected, Director Chopra made the very conscious decision to continue to push forward on rules that he knew would be unlawful and overturned. And you saw it with the overdraft, you saw it with medical debt. He was the one regulator that decided to not put his pen down and allow someone else to make some of those decisions. So, Mr. Pomerlin, in your written testimony, you called the Bureau a, quote, a political lightning rod that can have, quote, radical pendulum shifts depending on who occupies the White House. And it just seems, my observation would be, it seems most of the time when it's the Republicans that they come in and say, hold on, we've gone too far too fast, let's just stop in place while the Democrats just continue to blow through these legal bounds. Anyway, the idea of converting them into a commission structure isn't a new concept. I've been here for now, this is my year 15, and I think for 15 years this has been a discussion because there's a recognition of the dangers of this structure. So what advantages do you see with changing that structure?
Well, I mean, we're at a critical point in time, right? There's an inflection point here where we can make the Bureau more credible, more durable going forward. We believe that a 5-person commission, a bipartisan commission, would allow for the aforementioned dissent and debate that was required to actually form the policies, taking some of the political ideology.
Which is the structure that virtually every other regulator, SEC, others, they all have internal checks and balances, not CFPB.
CFPB does not.
Is it important to have industry experience when you're leading this?
We believe so. I mean, it's good to have the background of industry and how products and services actually work. Oftentimes they're misunderstood.
Okay, well, so this is a structure that Mr. Barr and I have talked about. Do you believe that the CFPB can and will actually still protect consumers with this new structure?
I believe so. The CFPB has a statutory required duties that it has to carry out. I don't think having a commission structure is going to...
So wait a minute, just because we've changed president doesn't mean we've automatically thrown out consumer protection? That's what we hear from the other side.
That's correct.
Okay, I just wanted to clarify that. That doesn't seem to be the narrative. Okay, well, basically, essentially, enforcement has become arbitrary. The current Bureau sends a signal to industry that the Bureau will let you know when you've violated the law or harmed consumers because they've given themselves that broad authority. Not that Congress has, not that anybody else has, but they now suddenly are, through enforcement letters and other things, they are bending the will of the law to what they view as what is proper. And by the way, CFPB can't actually give a clear, consistent, definitive definition to the term abusive regarding unfair, deceptive, or abusive acts of practice. So is there anything that is considered abusive that is not considered unfair or deceptive?
That is unclear at this point.
It seemed like a layman would actually be able to discern that, but we're talking about legalese, right?
Without the guidance from the former administration under Director Craniger, we do not have a definitive definition of abusive.
Yeah. All right, and I've got a few seconds. Ms. Fonseca, I'm sorry, I'm running out of time, but community financial institutions are often caught in the crosshairs. And we know about the cost of compliance. If the CFPB has its way, and I'd like to take your answer in writing if I could, but if the CFPB has its way, what would the cost of eliminating or reducing overdraft products have on consumers that you serve? And I look forward to having that answer in writing, so thank you.
Okay, thank you.
Gentleman's time has expired. The gentleman from Georgia, Mr. Scott, is now recognized.
Mr. Frothman, how are you?
Great, thank you, sir.
Please excuse my cold. I think it would be very helpful if you explain this phrase that is being used in these exchanges. They say with prejudice. Explain to us what that means in terms of relationship to the CFPB making any charges.
Great, thank you. And if I could just have 1 minute, I would just like to respond to some of the questions before that referenced our agenda. We're talking a lot about boards and funding. I think that people need to look around. They are firing FTC commissioners. One of the FTC commissioners who was fired is in the room down the hall. They're impounding funds. To be lectured about separation of powers at this moment of time is something else. We are so through the looking glass that I think people need to go back to the drawing board in terms of what we are talking about and update the talking points that are now a decade old. Because if we want to talk about executive overreach, if we want to talk about separation of powers, we should be talking about how this committee and this Congress created an office to look after military families that was shut down. We should be talking about how this committee and this Congress created an office to look after people with student loans that was shut down. These are the issues that are actually happening around us, but we keep going back to these same old tired talking points and bills, and it is just ever clear what they were always about. They were always about hamstringing the Bureau, making it easier for big banks to rip people off, making it easier for Silicon Valley to steal people's data when they make a transaction. And we should just be honest, if you care about separation of powers, if you care about executive overreach, we could talk about that because that's what's happening right now at 1700 G Street. I think, Congressman Scott, I think to your question, if I understand it correctly, what we have seen now is the current leadership of the CFPB has dropped nearly a dozen cases where the Bureau brought forward credible evidence that companies were ripping off their own customers to the tune of billions and billions of dollars. And in each of those instances, the current leadership chose to dismiss with prejudice those cases, meaning that the Bureau can never again try to get money back on behalf of those people, whether they were ripped off because a company lied to them, when they were trying to buy manufactured housing, when they were just trying to take out a loan to make it through the week. Student loan borrowers who were ripped off by an enormous student loan company who was collecting on discharged debt. That's this administration's priority now, dropping those cases and making sure the Bureau can never again help those borrowers, your constituents.
Yeah, I think that's very important for people to understand that the CFPB, once they use that with prejudice, it means that that case goes bye-bye. How damaging is that?
It's tremendously damaging. I mean, it's damaging for the Bureau, but it's damaging for the people on the ground. I think, one of the things that we heard on the campaign, that we heard from the administration, is they want to help people with costs. You know what would have helped people paid for groceries and paid for eggs? If they had a little more interest on their savings account at Cap One. But that company chose to deceive their own customers into not getting billions of dollars of interest. That would have helped real people, and that case was dismissed with prejudice.
Had it been dismissed without the CFP first trying to provide help to them?
No, I think this is one of the most frustrating things to see, which is, each of these cases involved thousands of hours of people's times. These are cases before a federal judge And all of that work, all of the work to try to make working people's lives a little better, basically lit on fire for what?
Well, I hope, Chairman, that we can find a way to really address the impact that this is having on the lower income and the people who need the help the most.
Gentleman's time's expired. The gentleman from Texas, the chairman of the Small Business Committee, Mr. Williams, is now recognized.
Thank you, Mr. Chairman. Thank you all for being here. And I must say, in listening to all this, that under a Trump administration, my business, my family, my friends, and my bank are much better off today with the diluted CFPB. And the CFPB's 1071 Small Business Lending Rule requires financial institutions to report 81 unnecessary data points on the loan. For smaller institutions, this rule creates a mountain of compliance burdens and will harm their relationship with consumers, which many are community banks and credit unions and who they rely on. This also leads to reduction in the amount of small business loans, and the cost of a loan will skyrocket and decrease access to capital. Now, my bill, the 1071 Repeal Protect Small Business Lending Act, will repeal this burdensome rule and give relief to the financial institutions who serve small businesses every single day. So, Ms. Fonseca, how will complying with these burdensome 1071 data requirements impact your ability to provide affordable access to credit for your small business members? And could you expand on the benefits of repealing this burdensome regulation?
Yeah, complying with this burdensome requirement is going to limit our ability to lend to small businesses.
There's no question regulations keep you from loaning, basically.
Absolutely.
Okay. When I talk to friends of mine that are bankers, accountants back home in Texas, one of the biggest concerns with the CFPB's regulatory agenda and the compliance burdens that accompany that agenda under former President Biden and former Director Chopra, the CFPB was left unaccountable and regulated through blog posts, speeches, and other illegitimate means. This left the financial service industry in a constant state of worry, never knowing what regulations or enforcement was coming next and how it would affect them and their customers. We must prevent this approach to regulation and the uncertainty it brings to smaller entities and other institutions and hold the CFPB accountable to Congress. That's a new word to them, by the way. So, Mr. Snyder, can you explain to the compliance difficulties that financial institutions face when dealing with the CFPB that is always expanding and often opaque regulatory regime?
Well, during the past preceding 4 years, it was certainly an exciting time to pick up the trade press in the morning because there was going to be a new blog or a post or something that your clients would be calling you about because it seemed to speak with the force of law, that there is some new requirement that you have to deal with. But there was absolutely no formal process that surrounded that. So not only are you questioning the legitimacy of the rule itself because of the manner in which it was announced, but you have no real way to understand what is required. So you're searching in the dark, you're spending a lot of money seeking advice from counsel, but I guess that's great for lawyers, but I'm not sure it's good for institutions that could be devoting those resources to lowering costs of credit and providing more innovative products.
Mr. Palmer, in your testimony, you mentioned that CFPB had misrepresented data to justify their policy decisions. I agree with you when you said facts matter and regulators must represent facts accurately. So it's deeply troublesome that CFPB misrepresented data to support their highly politicized actions, and industry participants should be able to trust that regulators are not falsifying information to achieve a political victory. This kind of behavior could have detrimental effects on our financial system. So, Mr. Pomeroy, could you elaborate on the most serious examples of the CFPB misrepresenting data and explain the harm caused by these practices?
Sure. I'll take the credit card late fee rule. This is a rule that would exponentially lower the late fee from $32 down to $8. And the Bureau's justification for this was that there was lack of competition in the marketplace and that the four largest issuers actually kind of dominated that market, when actually their data shows that those four issuers actually lost 4% of the market in the previous year. So it's important for them to be intellectually honest with the data when they're presenting it to the public. Otherwise, we're being led down roads based on intellectual dishonesty, and that will possibly affect the access to credit, especially for subprime borrowers, if we're not actually looking at the data correctly.
Well, thank you, and I just would close by saying, you know, the Trump administration, as I said earlier, is right on the right path with the CFPB, and as a business owner myself for over 50 years, car business in Texas, an economy with a lesser CFPB is much better than one that is under steroids like we've seen in the past. So thank all of you for being here. I yield my time back.
Gentleman yields. The gentleman from California, Mr. Sherman, is recognized.
Ms. Fonseca, I want to thank you and the other Southern California credit unions for helping us after the Palisades fire. I represent the Pacific Palisades. Mr. Chair, I couldn't agree with you more that we need oversight. A hearing like this, we don't have any government witnesses. In fact, this committee and its subcommittees has not had a government witness except from the Fed, but none that are part of the administration. You can't have meaningful oversight by Congress if you don't have government witnesses, and I look forward to us bringing Russell Vogt and others before this committee. Mr. Huizinga tells us that Chopra shouldn't have taken action that might be overturned by the court. Boy, I wish we had a current administration that not only adhered to court rulings, but even was reluctant to take action that they thought might face a credible attack in the court. I've been here for a long time, and today is a throwback to the committee that I've understood for so long. We're talking about the structure of the CFPB and the regulation process, and we have business telling us that there's high compliance costs, and the Republicans are making some good points about the CID system. And we're being told by the regulations are too tough, and Democrats are, God, this feels like 90 days ago. Today is different. Today isn't a hearing about whether the CFPB has a good or bad regulation. Today is a day when Elon Musk says CFPB, RIP, and we have thousands of people sitting at home subscribing to Netflix and being paid by the U.S. government. And the question that's really before us is, how do the generals react? How would the generals react when they're instructed by the president to arrest all the leaders of the Democratic Party? We're acting like this is normal times. It makes me feel better to spend this last hour in a normal committee hearing where Democrats and Republicans are saying the normal things they always say. But that is not the real situation here. And it's not a matter of do we get rid of this or that regulation. The CFPB has returned $21 billion to Americans since 2011 when it was founded, collected $5 billion in penalties. We have to not defund the police if we're going to deal with crime in the suites. And not only do we have the enforcement actions with the dollar amounts I indicated, but think of all the crimes and all the abuses that aren't occurring that never even get past the thinking stage because we've had a CFPB. And of course, the CFPB has protected veterans and secured $363 million in monetary relief for them. The structure of the CFPB was approved in a decision by Justice Clarence Thomas, not a member of my political party. We also have a major conflict of interest in that we see that Elon Musk is moving to make the X platform a payment system. Mr. Frotman, could that payment system be more profitable if there was no CFPB?
Thank you for the question, Congressman. And I think that this is one of the central issues, I think, before the committee, if we're going to talk about oversight, if we're going to talk about separation of powers, is there is no secret that Elon Musk wants to turn Twitter into a payment system. I found this tweet on the platform from him speaking in 2003 that says, Elon Musk says if done right, X would become half of the global financial system. That should be petrifying to...
Now, this payment system, we've got bank regulators that regulate most of the folks represented here, and credit union regulators. Musk wouldn't have any of that regulation, and he wouldn't have any CFPB regulation. Correct me if I'm wrong. I mean, they sent out the most recent email saying, oh, we didn't tell you not to do any work. We just told you to do no work except the statutorily required work. Is anybody in the CFPB doing any consumer protection today?
Well, they're certainly not overseeing the non-bank payment system in this country, which is the direct ambitions of Elon Musk and most of Silicon Valley.
Thank you.
Gentleman's time has expired, and before we move on to the next question, I ask unanimous consent to insert into the record a bill I have sponsored in the past, the Financial Protection for Our Military Families Act. The bill helps correct the record from the testimony of Mr. Frotman. Former CFPB Director Kraninger alerted us that she did not have the statutory authority to supervise for Military Lending Act violations and asked that Congress grant the Bureau this authority. My bill would have done that, but we were never able to get Democratic support to move it. The gentleman now from Tennessee, Mr. Rose, is recognized for 5 minutes.
Thank you, Chairman Barr and Ranking Member Foster, for holding this hearing, and thank you to our witnesses for taking time to be with us. I'll dive right in. Mr. Keene, can you talk about why many financial institutions would prefer to settle with the CFPB versus having their name dragged through the mud by an activist CFPB in litigation? I'm sorry, Ms. Keene.
Thank you for that question. A lot of companies are pressured to settle because CFPB has enormous penalty authority. It has a lot of tools in its ability to issue expansive demands on companies. And so rather than drag this out, they seek the certainty of a settlement rather than the uncertainty of lengthy litigation.
Thank you. And from your experience of watching this, do those settlements, would you say that the decision to settle has anything to do with the settling party's belief that they've acted inappropriately?
If you look at the language of settlements, the companies don't admit that they've done anything wrong. A lot of times there's uncertainty, particularly where new or innovative, I'll put a nice word on it, theories are brought by the CFPB. Rather than risk uncertainty in going to litigation and fighting over it, they'll resolve it even if they don't agree with it. And that includes whether or not they think the CFPB has authority to bring the enforcement action. There have been several enforcement cases settled with companies who don't appear to be under the CFPB's jurisdiction, but they'd rather settle than have to deal with that uncertainty, which impacts their businesses.
Thank you for that further insight, and that's my experience and observation as well. Mr. Palmerin, can you discuss how government price controls like those that the CFPB instituted on credit card late fees and overdraft services limit the ability of financial institutions to offer products and services to consumers?
Yes, thank you for the question. So placing artificially low fee caps on services will ultimately result in those services not being available or that credit not being available to consumers. So who is that going to hit the hardest? That's probably going to hit the subprime borrowers the hardest because they are harder to underwrite and there's more risk involved. So when you place these in overdraft's a whole nother thing because of this issue around whether or not it's actually credit or not and whether or not the alternatives given in the overdraft rule are actually real alternatives. Most banks will have to get rid of those products, and the customers that utilize them and depend on them will no longer have access to short-term liquidity.
And from my experience, and you might just give me whether you agree with this or not, from my experience, the alternatives then that consumers face are far less desirable than perhaps a modestly higher fee. Is that a fair assessment of what the alternatives are then?
I think that's a fair assessment, and we believe that consumers ultimately fare better in the depository system.
I appreciate that. Ms. Keene, what is the purpose of the Administrative Procedures Act, and how does adhering to its requirements benefit consumers?
The purpose of the Administrative Procedures Act is to allow a regulator a full opportunity to develop a record in support of whatever it wants to do. It's basically you take in evidence, you take in comments, you look at cost-benefit analysis in connection with a regulation that you're looking to promulgate. The Administrative Procedures Act allows for sunshine on the process, full notice and comment, so that all participants and folks who can be affected by a particular regulation will have an opportunity to provide information to the agency to consider in the development of its rule.
Thank you. Unfortunately, many banks have withdrawn from small dollar consumer lending due to the significant uncertainty regarding regulatory treatment of these products. Mr. Snyder, during your tenure at the CFPB, you oversaw small dollar lending. Can you discuss the importance of the CFPB issuing clear, well-justified rules with robust cost-benefit analysis for the small dollar lending industry? And you got 20 seconds.
Well, small dollar, many companies that provide small dollar products are smaller companies, so the compliance costs are going to hit them even harder, quite frankly, on a proportionate basis. If they don't know what they're supposed to do, if they don't know how they're to do it, they have no choice but to raise costs on everybody or withdraw from the market.
Thank you. My time has expired. I appreciate those answers, and I yield back.
Gentleman yields back. The gentleman from Illinois, Mr. Caston, is recognized.
Thank you. Quick question first, Ms. Fonseca, Mr. Pomeroy. Would you both agree that banks, non-banks that engage in bank-like activities should abide by the same consumer protection rules that are required of banks? Just yes or no? Yeah?
Yes.
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 Yeah, okay. I thought you'd say that. I raised that because I want to respond to something that Mr. Barr said in his opening testimony. He said that we have entered a new era where businesses are not attacked by tweet. Well, of course they're not, because the owner of Twitter put a couple $100 million into President's election campaign and in exchange got himself a job in the White House where he is hoping to earn a return on that investment. If the president were to attack Twitter, or if the president's sycophantic enablers in the Republican Party were to attack him on Twitter, I mean, I don't know, that would require a level of patriotism, courage, and public-mindedness that they have never shown. Of course they're not, doesn't make it right, but of course they're not attacking by tweet. So let's talk instead about how Elon Musk plans to get a return on his $200 million. Because if we give a damn about consumer protection, if we give a damn about competition and functioning markets, we should be petrified by what Musk is doing. Mr. Frotman, you had mentioned briefly with Mr. Sherman that Elon Musk is talking about this new payment system, X Money, that is expected to launch later this year. I believe you had referred to his quote when he said he hopes, I'm going to misquote it, he said he hopes to have users conduct their entire financial world on X. The former CFP chief technologist said that he has been given God-tier access to the CFPB system. I guess my first question for you, Mr. Frotman, is have you ever seen a CEO of a bank, a non-bank, or anybody being given God-tier access to the CFP data system before?
Absolutely not.
And can you describe exactly what that means and what data Musk is now getting that nobody else in the private sector has access to?
Sure. So this is tremendously concerning, I think, for consumers and competition, is that here is a person who has billions of dollars on the line when it comes to the dream of turning Twitter not only into a payments company, but into a super app like we see happening in China and other places. And you have the person who stands to benefit from this seemingly in charge and making decisions over what is basically their only federal regulator. And I think there are significant questions if we want to talk about oversight by this committee, if we want to talk about investigations by the Inspector General about what happened when DOGE employees were in the CFPB on February 7th, and then that same day, Elon Musk is tweeting CFPB RIP.
So can you just clarify, though, because he's getting information that Zelle, Venmo, Cash App, they don't have that information about specific consumers, right?
Well, I think he's not only getting information about consumers, he's getting information about his competitors. Part of the job of the CFPB, as tasked by Congress, is to make sure we understand markets and where there's risk. And there's a ton of risk when it comes to non-bank payments.
Well, I want to say something very partisan. I think the richest man in the world is rich enough, but apparently that's not a widely held opinion. Justice Brandeis, famously back in the 30s, said that when you have great concentrations of wealth in society, you only have three options. You can either allow the wealth to take over the government, which is to embrace fascism. You can allow the government to take over the wealth, which is to embrace communism, or you can break up the wealth and embrace competition. What is clear, and the fact that it is so partisan to attack the fact that the richest man in the world is now taking over our system, is that it is partisan to attack fascism. To say anything else in this committee at this hearing, in this moment, is naive. Now, we are shortly going to move to marking up stablecoin legislation. It is my understanding that Mr. Musk is saying he would also like to use a stablecoin rule some stablecoin legislation in order to facilitate what he's doing on the CFPB, which would, unless we put really strict guardrails, is going to make it even harder. So I guess with the last 40 seconds, Mr. Frotman, let's assume that he has all that data. Let's assume that he has a very permissive stablecoin environment. It sounds to me like we have a non-bank that is going to compete the hell out of all of the banks and all the systems that we have right now in a way that is deeply anti-competitive. Please tell me I'm wrong.
You are 100% correct.
We going to defend capitalism around here? We going to defend competition? Or we're going to put on a ball gag, climb down in the dungeon, and just do whatever Trump tells us to do? I yield back.
The gentleman yields back. The gentleman from South Carolina, Mr. Norman, the sponsor of the CRA disapproving the Bureau's prohibition on creditors and consumer reporting agencies concerning medical information, is recognized for 5 minutes.
Thank you, Mr. Chairman. You know, I think it's and thank all of you for taking the time to come. I'm a businessman. I'm a real estate developer. Mr. Frotman, your comments are outrageous, to be honest with you. You're talking the Democrat points. I'm glad you're bringing up Elon Musk. The American people owe a debt of gratitude to a man that's showing where tax money is going. They don't agree with it. 77 million people do not agree with the former president. And you resigned twice when under Trump. You resigned most recently in February of 2025. I kind of wish you'd stayed because you'd be the first one to get fired. And let me just say this, the fact that
Congressman, can I reply?
The fact that you're on the student loan, you formed the Student Borrower Protection Center. You took part in the Biden administration's forgiveness of loans. The people that you talk about, the veterans and the poor families, their tax dollars meant to pay student loans that they were forced to pay.
Congressman,
and now,
I think what is appalling is the richest man in America telling dedicated public servants who want to protect service members and students.
Do you not have any decency? Do you not have any? This isn't your platform. I've got 3 minutes left. I'm going to ask it to some sane people over here. So, but the fact that you took part in paying off loans that the taxpayers had no say-so in is unbelievable. Ms. Kuhn, one of Dr. Chopra's midnight rulemaking moves before he left was to remove medical debt information from the Consumer Report and prohibits lenders from examining the credit history of a borrower. We've got a bill up that we're trying to get out of committee, but do you think the CFPB even has the authority under the Fair Credit Reporting Act to require the removal of a debt that they owe? And the payment of it, I think, is an important part of a credit report. Why is it being removed? And does CFPB have that right to do?
I do not believe they have that right. The Fair Credit Reporting Act actually addresses medical debt, and it protects consumers' privacy with respect to their medical information. It allows financial institutions to use the financial aspect. Does a consumer have significant medical debt? And consider that in connection with making a loan or a larger mortgage transaction, for example. The rule ignores the restrictions and requirements of the Fair Credit Reporting Act. It ignores data that had been supplied. It relies on 10-year-old studies that really have no bearing on what today's market looks like. From the time those studies were conducted by the CFPB to the issuance of the rule, the market had changed. It had already made significant changes, and so it's based on faulty premise. So it's got a terribly weak record associated with it, and even the Small Business Administration filed comments raising concerns about the process that led to the rule. So I agree that I do not believe they have the authority, and even under the Administrative Procedures Act, they don't have the record that supports the steps that they took.
And that's the audacity of Mr. Chopra and his disdain for the American people. And if you're going to exclude medical debt, what about paying your credit card off? What about paying your loan on your house off? Why not exclude that? Why not just exclude everything? So you really, and student loan repayments, what's left, that was so much advocated by Mr. Frotman to give away from, or to force the American people to pay for. What about excluding that?
And that's one of the concerns about the approach that the CFPB took in the medical debt rule. What's the next thing that's not popular that they want to take out of the financial system to hide or mask information? The legal theory that they used to support the actions they took in the rule would support them, basically anything they're not happy with, small dollar, or student loans, or things like that. It's my view that that's the role of Congress to make those decisions. The Fair Credit Reporting Act has a whole section where Congress has decided what's fair to include and what's not, and they ignore that entirely in the rule.
Okay, thank you so much.
Gentleman's time has expired. The gentleman from Pennsylvania, Mr. Muser, the author of the CFPB IG Reform Act, is now recognized.
Thank you, Mr. Chairman. Thank you to our witnesses. And Mr. Chairman, we're maybe pleased Mr. Frotman is here. His testimony outlines precisely why the CFPB needs to be completely overhauled. Mr. Chairman, I mean, the level of arrogance that we saw when the CFPB was in existence, the seemingly superiority complex, the dogmatic ideology, the narrow-mindedness, the unwillingness to listen to even the testimony that's here, the unchecked power, Mr. Chairman, is dangerous to our government. And clearly, absolute power corrupts absolutely. And listening to what's been cited by the other witnesses, failed to follow the law. That's a pretty serious comment from a objective stakeholder. Dying a death of 1,000 cuts, meaningless to the previous CFPB and to one of the witnesses up here. Weaponizing the Bureau to use $700 million to carry out its unauthorized mission. While being asked simply for a credible and durable Consumer Protection Bureau is what's being asked, Mr. Chairman. So I've never heard anything from stakeholders that was positive about the CFPB under Mr. Chopra and apparently under this Mr. Frotman, except from Democrats who on this committee are protecting a bureaucratic power while they could control it. So to get to questions, Ms. Fonseca, many institutions cap their growth quite deliberately to avoid crossing the $10 billion triggering the CFPB activities. However, and I know this from speaking to those in the field and throughout the industry, under $10 billion still feels the pressure to build out compliance teams just in case. Can you give us an example of what sort of fear existed and forced you to slow down or scale back services to your members?
Yeah, we have not scaled back services. However, we have spent the last 4, now going on the 5th year of preparing for CFPB oversight. As I mentioned in my testimony, that's going to cost us about $4 million a year. We've spent at least $500,000 so far, and that's in addition to the $10 million plus that we're going to incur in lost interchange revenue from debit cards.
right, thank you. Ms. Kuhn, over the last 4 years, the CFPB stretched its authority, ignored the law, has been pointed out. Can you provide some examples where the CFPB was intrusive, not helpful, even damaging?
The CFPB has taken upon itself in the last several years to look at companies that are on the edge and often outside of their authority. Using their CID authority, they have the ability to look at a company to see if they're covered. They haven't thought about that first. And so they have issued expansive demands on companies in areas that have nothing to do with consumer financial services, and it required those companies to expend a lot of money just to prove a negative, to say, hey, no, we're not covered by you. We haven't violated the law. There's nothing here.
And what did that look like in terms of business loss, operations disrupted, reputations damaged?
For many of these companies, they have a relatively small compliance group. You know, these are small to mid-sized businesses. It requires everyone to put work on hold to comply with these demands. It required a lot of expenses from electronic discovery demands. There's a several-page list of specifications that the CFPB will send and say, we want your data, but you have to synthesize it and make it fit in exactly the way we want to look at it. Right. That's very expensive for small to mid-sized businesses.
Many irrational disclosure requirements, sure. Do you all agree the CFPB should become more focused, or maybe even solely focused, on addressing consumer fraud? I'll start with you, Mr. Schneider.
It's certainly an important part of their mission and would be resources well spent.
Okay, to the other witnesses.
I would agree that they're an important part of the equation. There are many parts of the government that should be playing that in that space as well.
I agree as well. Fraud has grown significantly, and many consumers are being impacted by fraud.
Okay, great. What do you all think as well about the CFPB being structured in with a bipartisan commission like the FTC with a 3-member bipartisan board?
Would certainly facilitate discussion. Staff would have to appeal to a broader set of interests as it makes its presentations.
I would agree. I would say a 5-person bipartisan board would work best here for the reasons mentioned. We certainly have to have debate and dissent. It's important in the policy.
Thank you. My time has expired. I yield back. Gentleman yields back. The gentleman from Wisconsin, Mr. Fitzgerald, is now recognized, and he is the author of the Making the CFPB Accountable to Small Business Act.
Thank you, Chairman Barr. Thank you for holding this hearing. Thank the witnesses for being here today. Seems to be a little bit of revisionist history going on here this morning, kind of in line with everything else I've seen in my other committee, Judiciary. For years, I mean, the CFPB has operated kind of with significant regulatory power, and Director Chopra sat before us many times with that grin on his face, because I think that certainly he enjoyed the havoc that he was creating and raising throughout the private sector. He thought that was part of his mission. I'm convinced of it. But while consumer protection is critical, the regulations are overly burdensome and are poorly analyzed. They can reduce access to financial products, and that's been the issue since the CFPB came into play on these issues. So the bill that the chairman's referring to, I think the CFPB being accountable to Small Business Act, it kind of addresses some of the concerns that we've been discussing here this morning, and I think strengthening the agency's obligation to do the cost-benefit analysis. I mean, that's fine if you're going to come up with ideas on how you're going to have a direct effect on financial institutions, but if you don't have any cost-benefit analysis, it flies in the face of financial services, right? I mean, we kind of live and die by the idea that the numbers tell the truth. So, Mr. Pomeran, can you discuss how kind of failing to tailor the regulations for small business institution has a direct effect on their ability to serve small business and consumers? Because this has been the problem for us, is that you can't come in here and listen to Director Chopra tear apart the banks and the credit unions of this nation, and then on Tuesday, bring in the same committee and have a discussion about, well, you know, it just doesn't seem like the banks or the credit unions are really helping the average consumer at this point. So, I mean, there was this discussion that continued over the last 2 years that really made no sense, but there were never any numbers to back it up. and I was wondering if you could comment on that.
Well, I mean, we are certainly in favor of a more robust cost-benefit analysis when the Bureau is considering policy considerations that are going to affect either the consumer or small businesses. And oftentimes, the Bureau will ignore its own data that shows that there will be detrimental effects to actual small businesses or consumers, but proceeds with those rulemakings because of ideological guidance. We believe that the cost-benefit analysis needs to be paid attention to. We need to understand how it's going to affect the economy, how it's going to affect consumers, and not just throw out pejorative terms to prove a point.
Thank you. So under former Director Chopra, the CFPB saw a significant shift in its approach to consumer protection, right? I mean, it was characterized by overextension of its power. I think the director was proud of the idea that he could continue to kind of stir the pot on many of these different fronts. But, Ms. Keene, how would greater statutory clarity and limits on the Bureau's authority to improve regulatory certainty just bring more of a competitive and consumer-friendly marketplace?
When companies know what the rules are, then they're better able to compete. If it's more of a gotcha game, right, where you've already innovated and created new products, and then to find out that someone in Washington has decided they don't like that, that's unfair to companies, and it really does stifle innovation and the creation of new products and services to serve consumers.
I don't want to put you on the spot, but is there an example of that really comes to mind where everyone, whether you were in banking or credit union environment, knew that it was absolutely an overextension of the CFPB's authority?
Well, I think the most recent example is a rule that is still out for comment, which is the revisions to the Fair Credit Reporting Act rule. There are a lot of proposed new interpretations that are well outside the statute. Companies have built their businesses with an understanding of the law, and if what the CFPB has proposed were to go forward as a rule, it would require a complete overhaul of the consumer data industry, of financial services uses of consumer reports. That's a significant change and will result in a significant cost. It also will drive many companies out of business because in the proposed rule, the CFPB says we want to now declare these companies who have not been viewed as a consumer reporting agency to be ones, and then they will have to comply.
Thank you, Chairman. I yield back.
Thank you. I now recognize myself for 5 minutes of questioning. And I know we have a subcommittee chairman, Andy Barr, just left, but I want to thank him for holding this hearing, and I want to thank all the witnesses for joining us today. This is an important hearing as we discuss the future of Consumer Finance Protection Bureau. The CFPB was created to, as the namesake says, to look out for the American consumers, and at times, it has lived up to that mantle. However, in most cases, it has become a political tool with little to no oversight. That is why the Senate must confirm Director McKernan so that the important process of refocusing the agency back on consumer protection can finally begin. Ms. Fonseca, I want to ask you a question. Thank you for making the trip from all the way from Southern California, where I'm from, to testify before us today about how the CFPB has hurt your ability to better serve in our communities. As an institution that is approaching the $10 billion threshold for greater CFPB scrutiny, have you examined the impact and cost that will be, crossing this arbitrary threshold?
Yes, thank you very much for that question, Congresswoman, and nice to see you again.
Good to see you.
Yes, it's, as I mentioned in my testimony, we have spent the last 4 years, going on our 5th year, preparing for regulatory oversight by the CFPB, and that we've already spent over $500,000, and we will be spending about $4 million a year go forward. That includes the addition of at least 30 staff members to oversee compliance related to CFPB regulation.
I mean, would you say your focus on how you serve your members be any different as a 10.1 billion institution, or if you're a 9.9 billion dollar institution?
Yeah, it doesn't even make sense that it would have to change at all. But having to focus on CFPB oversight takes that focus away from our ability to serve our members, and that is why we're here.
Sure.
Credit unions are here to serve our members.
Thank you. Ms. Kent, as you know, CFPB is required to maintain a consumer complaint system and publish an annual report to Congress. That report should summarize complaints received in the previous year. And this system is used by the CFPB to sometimes even support agency actions or including the major rulemaking. But I've heard that this system has been overrun by large volumes of fraudulent disputes by bad actors that have distracted from their legitimate wrongful conduct complaints. So this is not only unfair, but it skews the complaints and also undermines the integrity of the complaint data. So do you share my concerns regarding this integrity of the data?
I do. The CFPB's consumer portal was stood up to collect complaints for consumers. But what it has become for a lot of companies is an avenue for credit repair. And that's affecting not only consumer reporting agencies, but also financial institutions who want to hear from their consumers if they have an issue. And instead, these third-party companies are flooding the system with disputes about credit reporting that have nothing to do with a complaint about a financial product or service.
So as Director McKernan comes in, do you have any advice for him to improve the customer compliance system? How would he do a better job?
Yes, I think that he could direct his office that runs the complaint system to meet with industry, to look at these complaints, and to talk through ways in which we can identify when it's being abused by third parties and not for the benefit of a consumer.
Thank you. Ms. Fonseca, let me come back to you again. You are part of an institution that is regulated by bipartisan board, the National Credit Union Administration. We all know that regulated entities don't always agree with everything that comes from the regulator, but would you say that the regulatory environment is more stable and transparent when you are regulated by the NCUA board?
Absolutely. There's transparency. We're able to have insights into their board meeting discussions, and there's not a lot of volatility. But you're right, we don't always agree with them, but it works, and it works very well.
And given its long track record, I think you would agree that NCUA has been able to be an effective financial regulator with a bipartisan board.
Absolutely.
Yeah, thank you. I think the NCUA is a great example of how we could reform the CFPB to be more bipartisan and accountable. So thank you for being here. Now, I yield back my time, and I want to recognize gentleman from California, Representative Vargas, for 5 minutes of questioning.
Thank you very much, Madam Chair. Appreciate it. Apologize, I had to slip out for a second. That's what happens when they double book you around here. But I'm back. I heard most of the testimony earlier. I represent the San Diego region, and the San Diego region is blessed by having the Navy there and many, many military personnel. And we're very blessed because many of them stay there. They retire there. But unfortunately, they become victims, oftentimes, of financial scams. Mr. Frontman, in San Diego, in the San Diego region, we have 96% more CFPB consumer complaints filed by service members. You know that, I'm sure. Could you talk a little bit about what is happening right now and how we've helped them before and how we're not helping them right now? Because I'm getting these complaints right now from people, and they're saying they're calling, there's nobody there.
Thank you so much for the question, Congressman. I've actually visited the Marine Corps Depot training facility with Holly Petraeus. So this is critically important. You know, one of the central tasks that Congress directed the CFPB to do was look after military families. And the track record of the Bureau across administrations before the most recent change, I think, was stellar. We got back more than $200 million for military families through enforcement actions. We helped with 400,000 complaints. And what you see now is just devastating to military families. They told the people who staff the office that the Congress required, the Office of Service Member Affairs, to stop working. They broke the complaint system. So we've heard a ton today about overreach. We've heard these amorphous, vague comments about CFPB overreach. Is it overreach when the Bureau took enforcement actions against a bunch of scammers who ripped off military families, who ripped off veterans, who ripped off retirees? We've heard a lot in the abstract about the Bureau and the prior leadership, but we haven't heard specifics, because I think that is this is one example of exactly what the Bureau was tasked to do, and they're not doing right now.
The other thing that I think is very important also is to talk about elderly. You know, again, San Diego is a young town, but it's not that young. I mean, a number of us are retired. Not me, I'm not retiring, for the record. But a number of people are, and there's a lot of scams, again, against elderly. And you could, before, I got all these positive comments about how the CFPB was doing their job. Now I'm getting all these complaints because nobody's there. Could you comment about that?
That's correct. The acting director of Vote told the Office of Older Americans to stop working. The people who submit complaints about themselves or an elderly parent or grandparent saw that system broken. So, you know, there's been a lot of charges leveled, but I think one of the things that I think we all agree on is that the CFPB needs to work. The CFPB needs to work on behalf of consumers and service members and older Americans. It needs to work on behalf of honest businesses, and it's not now. The inspectors that are supposed to take care of service members and older Americans are sitting at home instead of doing their job.
Mr. Fruman, I want this on the record because I think that I've been around long enough now that you see cycles. And the unfortunate cycles are this. We've talked about predators, and we've seen this. Oftentimes, my colleagues on the other side ultimately control government. And then you do see an overreach, all right, but by the banks and others, and we get into a financial slide. And then we get into a recession. Then we get into real trouble. And then consumers, as we saw in 2008, get ripped off. So we heard today that the CFPB is the predator, that you guys are the predator, that you were the predator. Could you straighten the record out on that? And I want this on the record because I think it's going to happen again. And I want to make sure that you tell the truth. Go ahead, sir.
Thank you so much. So, you know, we've heard a lot of attacks on CFPB leadership, but these are really attacks on dedicated public servants who wake up every single day just trying to make their neighborhood safe. So many of us who work at the CFPB lived through the financial crisis and watched community after community decimated while a bunch of billionaire bankers got off scot-free. And what we do every day at the Bureau, or what we did every day at the Bureau, was to try to make sure that doesn't happen again. What is happening now at the Bureau, where there is no oversight over massive non-banks in this country, is bad for businesses. It is bad for consumers, and they are setting up the situation that there will be another financial crisis in this country, and you all, or the people sitting in the chairs after you, will be forced to deal with it once again.
I agree. I do want to, lastly, with 10 seconds, just thank the people, the dedicated servants at the CFPB for all their hard work. Thank you. I yield back.
Thank you. I now recognize the gentlewoman from Texas, Representative Dela Cruz, for 5 minutes.
Thank you, Chairwoman, and thank you, witnesses, for being here today. My district lies in deep South Texas, on the border of Mexico and Texas, encompassing Hidalgo County, which is over 80% Hispanic. That being said, in speaking with my community banks in my district, we're a rural area. Community banks, regional banks play an important role in our community in helping first-time entrepreneurs, which I once was as a Hispanic female-owned business, and it's hard. It was hard to be a first-time entrepreneur and not have a wealthy family that could help subsidize my desire to one day be a business owner. So I leaned into my regional banks that provided me the American dream as a Hispanic female in a rural community. That being said, the work that the regional banks and the community banks do in our community is very, very important. Unfortunately, under the Biden administration, the CFPB became a political organ for the administration. It pushed partisan rulemaking like the 1071 rule, which everyone disliked, including minority depository institutions, as I said, that are in my district. I am a proud original co-sponsor of my fellow Financial Services Committee member and chair of the Small Business Committee, Roger Williams, to repeal Section 1071. And we have to use our control in Congress to set the CFPB straight and enhance transparency and establish guardrails. As a freshman in the last Congress, it baffled me that in a House that had a very slim majority, where Republicans and Democrats could hardly agree on anything, there was one thing that we agreed on in both the House and the Senate, and that is that 1071 was bad for minority communities like mine. It was bad for entrepreneurs like I once was. It was bad all the way around. And I want to remind everybody in this room that the House agreed that 1071 was bad. The Senate agreed that 1071 was bad. And when it went to the White House, the Biden administration, President Biden vetoed the repeal of 1071, thus saying that the people's voice in the House, the people's voice in the Senate did not matter, and that they were going to put this burdensome regulation on community banks, regional banks that make a real difference in Hispanic districts and minority districts like mine, that they were going to forge forward in having 1071 hurt communities like mine. It is despicable. It was gross that the Biden administration moved forward and vetoed what the House and Senate wanted to move forward in repealing this. That being said, I'm going to ask Mr. Pomeroy, can you share the benefits of passing Chair Williams' bill to repeal 1071 and why it is necessary to ensure small businesses are able to access the critical capital and continue to serve our communities?
Well, a repeal of the rule would certainly reduce compliance costs for lenders to lend to small business. That would increase the number of small businesses out there, and of course, that's good for the economy. Absent a repeal, the rule should be looked at and possibly re-proposed to lessen that burden going forward.
So what I'm hearing is the repeal of 1071 is going to be good for minority communities like mine. It's going to be good for entrepreneurs who have the American dream of owning their small business, and that it's going to be good for the economy. Is that correct?
That's correct, Congressman.
Then I see no reason why it shouldn't be repealed. With that, I yield back.
Very well. Thank you very much. I now recognize gentleman from Nebraska, Representative Flood, for 5 minutes.
Thank you, Madam Chairman. There's a fundamental problem that I think is going to continue to come up in this committee related to the CFPB. The Bureau has been at work extending its authority for as long as possible when led by Democrat-appointed directors. A good example of this is CFPB's larger participant rulemaking targeting consumer payment applications. The rulemaking lumps several different types of payment actors under the same umbrella. The Bureau even hinted via an employee's speech that merchants might be implicated as large payment players in the future. Last year, I asked Director Chopra about the merchant exclusion and whether payments alone constituted commerce. In a response via a question for the record, the director made the case that a merchant, quote, that incorporates payment capabilities directly into a website, end quote, could potentially blur the lines between banking and commerce and therefore be subject to CFPB oversight in the future. To be clear, Dodd-Frank, Mr. Frontman, Dodd-Frank explicitly calls for an exclusion for merchants from the CFPB's regulatory purview. The idea that a merchant engaged in consumer financial activity due to payments activities in the merchant's own store or website is ridiculous. And using that logic could lead the CFPB to have examination authority over every mid-sized to large retailer in the country. This part of a larger pattern from the Bureau, this is part of a larger pattern by extending its reach and authority as far as possible over time with limited checks. And that's why it's so incredibly important that Congress work to rein in the Bureau's authority and lack of accountability. Mr. Schneider, given your experience working at the CFPB, do you have any thoughts on how Congress and the new director should aim to keep the Bureau from expanding its own authority in the future?
Well, put them under appropriations, then they have to explain to you what they want to use resources for, and you can decide if you wish to approve that. I think putting meaningful restrictions on their use of their UDAP authority, it's too broad. They should have to articulate a principle before they bring an enforcement action. There's a case that they brought that would upend the entirety of indirect auto lending, and it's brought on a UDAP theory that I might add stands in contravention of their own interpretations of an actual regulation. So I think that's that's certainly ripe for reform.
Continuing with you, Mr. Schneider, one of the interesting things about your testimony is that you made the observation that enforcement staff shouldn't be involved with directly planning or executing the exams. Can you speak to why it might be problematic to have enforcement staff directly involved with planning routine examinations?
Well, supervision is a confidential, prudential process. It's quite powerful in my experience. It requires cooperation between the Bureau and the entity, and it can result in very quick action to stop unlawful activity and to redress consumers. But if the entity feels that this is really just a fishing expedition that's going to get handed off to the enforcement team, they're going to treat it like it's a law enforcement matter. They're not going to cooperate, and the entire thing is just going to become an enforcement action, which is going to delay redress to consumers. So there has to be a divide, and having any involvement of enforcement personnel in supervisory activities, I think, is troubling.
As a member of Congress very interested in our housing supply issues and getting first-time homeowners into homes, I think it's interesting that the cost to originate a mortgage has gone up nearly 50% over the last 4 years. It's nearly triple what it was before 2010. Mr. Schneider, to what degree do you think this increase in the cost of mortgage origination is a result of regulatory burden, including from the CFPB?
Well, what intuitively seems a lot can be attributed there. There are state regulators that have always regulated mortgage services. They're quite well equipped. They have extraordinarily broad powers that are extended to them by their state governments. They've been working very dutifully in the past several years to coordinate their activity on a nationwide basis. Simply layering on another level of federal oversight to some extent is adding additional costs that could very easily be handled by the state system.
Well, thank you very much. You know, at the end of the day, we do need to protect consumers. We need to think about fraud. We need to think about deep fakes. Fraud is monopolizing the time of a lot of folks in this lane, and I want to see the consumer protection of the federal government focus more on fraud and less on gotcha tactics. And with that, I yield back.
Thank you. Before I go to the next member, I would like to recognize Ranking Member Foster.
Thank you. I'd like to ask unanimous consent to enter 3 statements into the hearing record from groups strongly opposing the Republican bills that we're considering today that would undermine the CFPB and weaken consumer protections, including one from Americans for Financial Reform, a second one from Consumer Action, and a third from the National Association of Consumer Advocates.
Without objection. Thank you. And now I recognize gentleman from North Carolina, Representative Moore, for 5 minutes.
Thank you, Madam Chair. A little bit about, I guess I'm the newest member on the committee, which is why I get to speak last. But before becoming a member of Congress, for 30 years I was an attorney, and I actually represented consumers during that time, represented businesses, represented a number of folks, and had the opportunity to deal with fraud cases over time. So when I came as a new member of Congress, I wanted to see, well, what does the CFPB do? And I actually had somewhat high hopes, which I guess proved my naivety on that subject, because as I dealt with this, becoming a member of this committee, realized that the comments made by members like Ms. De La Cruz to my left and others of the abusive practices, Madam Chair, of this agency just shocked my conscience. And this is, as an American, as an attorney, seeing this happen. And the fact that financial institutions could not even rely with any certainty on what was legal and what was not. It was completely a game of gotcha. An agency that is not funded by the normal appropriations process, but is incentivized to get money by levying fees and fines. It's almost like if you had a police officer out there paid more to write more tickets or something. It's antithetical. It's completely antithetical to any notion of due process and equal protection in any way. And so I think what you have with the way CFPB under the prior administration governed was actually the predator in this case, by preying on businesses, paying on companies to exert fines, forfeitures, and fees. And with all due respect to Mr. Frotman, I read your comments, heard your comments. I mean, I've been an attorney for 30 years. To approach something like this when it comes to a significant part of regulatory law affecting so many in this country with a clear political agenda, it just shocks my conscience. And I would ask that, I'm glad the new agency isn't doing that, and I would just ask those that ever want to serve in these positions, certainly don't do this. This is, you have millions of Americans who count on having access to capital. You have individuals, you have companies, businesses that are built on providing that capital. And the one thing that folks need to know is, what are the rules? What are the rules of the road? And follow those rules, and don't change them midstream, and don't do them in such a punitive way, simply to either exercise or abuse power, or to try to obtain more money from these entities. So the more I've studied this, Madam Chair, and I hope that it comes to the attention of the American people who see this absolute abuse in government. And it's Exhibit A of what's wrong or what has been wrong in so many things. But I did think about something. Under the former director, it seems that the CFPB made a habit of like bypassing the Administrative Procedures Act's notice and comment requirements, just enacting things. I think there was a whole host of these midnight entries. I don't know if they were done with an auto pen. I don't know how they were done, but they were done. But I would have a question for Mr. Schneider. And you have extensive experience with enforcement at the CFPB as well as the APA. And I'm just curious, first off, would you agree that the APA applies to the CFPB?
Of course, yes, sir.
And is agency guidance, is that a rule?
It should not have the binding effect of law if it hasn't gone through the appropriate approval process.
What about a press release?
No question there.
All right. How about just a statement by the director? Is that a rule?
No.
And so should a press release or a statement by the director be the basis of an enforcement action?
It certainly shouldn't be.
But my understanding is that did happen under this prior administration. Is that correct?
Well, certainly the prior administration took enforcement actions that did not seem to be well-grounded on any properly promulgated rule, and in some cases stood in contrast to properly promulgated rules.
That is like 100% not correct. Over and over again, the director made clear
you're clearly a
before this
political
committee
hack.
that-
I didn't ask you a question.
If you wanted the truth, we could have had a
I didn't ask you a
conversation.
question, sir. I would just simply say
still the
that the
gentleman's
comments by
time.
Mr. Frotman disregarding the rules of this committee, his disregard of rules there simply shows the problems with this agency. With that, Madam Chair, I yield back.
Thank you. I now recognize the gentleman from Florida, Representative Donners, for 5 minutes.
Thank you, Madam Chair. In this committee, it goes without question my views on the CFPB. I've been very clear that this agency is a rogue agency that was created on a partisan basis at a time period when, frankly, the Democrats were choosing to solely blame bank activity for the financial collapse, as opposed to looking at the regulatory environment that had been set up, which based upon faulty underwriting, which cascaded through the financial economy. So there were many people who bear the burden of what happened in the economy in 08 and 09, and just setting up this regulatory behemoth with no oversight and no accountability to the American people, except to the whims of Democrat politicians, has always been wrong. In my view, is still unconstitutional, and this agency should be repealed never to be seen again. And I think that the argument of this is the only way to have consumer protections at the federal level is a complete folly, and it is wrong, and it is short-sighted. Consumer protections have existed in every federal agency long before the CFPB was ever contemplated or created. And those are the facts. That being said, if the least we could do is actually reform the CFPB and actually be an agency that is responsive to Congress and responsible as it executes rulemaking in the marketplace, that could have some positive benefits. But my position remains that this agency just needs to be completely removed, and then we move forward on a real and responsible regulatory environment that allows our economy to grow in a responsible manner going into the future. That being said, Ms. Fonseca, as the head of a company right on the cusp of being subject to CFPB overreach, can you describe how the CFPB stifles growth and innovation?
Thank you for the question. As I mentioned previously, we've been very focused on preparing for CFPB oversight and also concerned about, classification of junk fees for programs that our members want. So we're spending way too much time on that and not enough time on innovating new products and services for our members.
Thank you. Mr. Schneider, what's the actual cost of compliance imposed on the private sector by former Director Chopra over the last 4 years?
I'll be perfectly honest, Congressman, I don't know that figure. I know just to respond to an initial civil investigative demand, given the short scope of time involved and the massive amount of data, could be tens, if not hundreds of thousands of dollars, much less just thinking about, what a particular proposed speech idea might have. The cost to your compliance department would be enormous.
Tens of thousands or hundreds of thousands of dollars just for one company?
For one company, for one investigation.
Okay. Ms. Keene, what was the consumer protection regulatory landscape before the creation of the CFPB?
Before the creation of the CFPB, you had the prudential regulators who had authority to look at the companies that they examine for consumer protection. In addition, you had the Federal Trade Commission. I did want to take exception that there's never been a cop on the beat. As someone who ran a division at the Federal Trade Commission, we investigated companies for violations of consumer financial protection laws and brought cases against those companies.
Okay, thank you so much. And Mr. Pomeran, how would financial institutions, businesses, consumers, and the economy as a whole benefit from the abolition of the CFPB?
Well, first and foremost, we need a strong consumer regulator. We need one that is going to be fair and reasonable. I think that to the points made earlier, when we have rules and guidance and even reacting to blogs and different circulars, things of that nature, it is hard to comply with what is actually needed to be complied with. It's unclear to comply with the uncertainty that's created by an agency that doesn't go through an APA process with notice and comment and the like. I think consumer protection needs to be had. We need a durable, credible consumer regulator that's going to be fair to all of the the stakeholders going forward.
And to add on to your comment, and I think people will hear me say, get rid of the CFPB, and trust me, I mean it, get rid of it. But to that point, yes, there are consumer protections that should be durable, that follow the Administrative Procedures Act, and not have an agency which is rogue, in my view, depending on the presidential administration and just moving through our economy with no accountability whatsoever. With that, I yield.
Thank you. Well, please join me in thanking all of our witnesses for joining today and answering the questions from the members. Without objection, all members will have 5 legislative days to submit additional written questions for the witnesses to the chair, and the questions will be forwarded to the witnesses for your responses. And the witnesses, you will have until April 30th to provide written responses if you receive that question. So thank you very much for being with us today. With that, the hearing is now adjourned.